Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, viewing the Australian dollar, a very much bullish disappointment came through after taking the challenge to the area of 69.95 was rejected and the market plummeted back towards the bottom side of the range close to 69 cents. In light of the technicals, it is assessed that the market will likely struggle there again unless we see some kind of strength emerge from the indicators, which at present isn't seen, but the RSI is attempting at least towards that midway point. In light of the pattern, though, there's a lot more to cover if the market does get above 69.95, as the next target is seen around 70.5 to 70.55. But as I mentioned, the market is likely to struggle there after the bears did ambush, and no doubt will do so again. Any pullback still looks towards that 68 figure 35, which is where the 60-day moving average is, and most probably find somewhat demand or bullish interest emerging from this area. Looking at the euro, after much volatility, the euro dollar remains in uncertain waters as the US dollar, which measures the greenback strength against a basket of 6 major currencies, holds steady at 101.34. The pullback in the euro follows Tuesday's first public comments by US Federal Reserve Chairman Jerome Powell since the central bank raised interest rates last week. Although Powell failed to say anything significant on Tuesday, in his question and answer session at the Economic Club of Washington, D.C., he did ease investors' hopes for less aggressive monetary policy after the blockbuster job report, which is the non-farm payrolls on Friday, which 517,000 jobs were added in January. Following Fed Powell's remarks on Tuesday, John Williams, the president of the Federal Reserve Bank of New York, said he still thinks the Fed remains on target of seeing its interest rate rises to around 5 to 5.5% by the end of the year, and he feels that rather a very reasonable view, even though the Friday jobs report was somewhat strong. So looking at the technicals, the euro is poised for another down test and looking towards the 106.20 region and reassess from there. Failing to hold would expose the region of low 105. Technicals are bearish, so any upward step still likely to see resistance around 107.65 to 108.15. The dollar yen still contained by the level of 132.80.90 after its brief challenge did back away sharply, but I still feel that we should not abandon this level, as a break above here would expose the region of 134 to 136 as an objective, and any pullback likely to be shallow with the support seen around 130.65. The pound is attempting to gain further since rebounding off 119.55, but I feel the market is still somewhat negative and therefore may give up the gains rather quickly as it approaches 141.45. If we see a rejection from there, then the market may stage another down test and look back towards its bottom side of 119.5 and reassess. Very small days in terms of gains, that is for gold, after two heavy market daily challenges came into the bottom of the range of 1,860.65, which I feel will be challenged again. A break there would give further scope to the downside and look towards 1,820.26 until I see some kind of recovery that is supportive enough to support again to the top side of 1,900. Then I feel the bears are still lurking. Wrapping up with oil, we're just breaking through that topside level, which is around the 78.5 mark. I feel there is further gains coming into play here and therefore could look towards $80 to about $82 a barrel. But be on your guard, because once we get to that top side of the range, then we most probably are heading back towards 75 and reassess. Well, that wraps it for today. Thank you very much for joining me, and as always, look out the intraday report. I hope you enjoy the rest of the day.